Today, Bitcoin and Ether cap off a week of rallies stemming from ETF hype. Celsius gets the nod to exit bankruptcy and repay customers. And 1 week after SBF's guilty verdict, Cboe Digital's Katherine Kirkpatrick lays out what she thinks U.S. lawmakers should now prioritize as it pertains to crypto. Welcome to CNBC's Crypto World. I'm Tanea McKeel. The top cryptocurrencies built on yesterday's gains today to cap the week, with Bitcoin adding 3% to trade at about $37,400 and Ether advancing almost 4%. Earlier this morning, Ether broke the $2,100 level for the first time since April, helping it notch a roughly 15% weekly gain for its fourth up week in a row and best week since March. Bitcoin ended the week up 8% for its fourth consecutive week of gains and ninth winning week in the last 10. The altcoins were perhaps the most notable gainers for the week. Solana up 32% for the week, along with Polygon with a 25% gain and Cardano at 15%. The alts were already playing catch-up with the bigger coins earlier in the week after Ether crossed the 1900 mark over last weekend. Now, typically, after a Bitcoin rally, you see Ether's price action follow shortly after, and then the rest of the market catches up. And that's a pattern that has repeated with the recent spike in positive sentiment in this market. Now, the jury's out on how far current sentiment takes us. JP Morgan just had a note out this week arguing that this rally is likely overdone, that the expected approval of a Bitcoin ETF is largely priced in, and won't ensure that regulators take their foot off the brakes on crypto. Okay, let's talk about the top stories. It is official, BlackRock is looking to launch a spot Ether ETF. On Thursday, the Nasdaq filed on behalf of the asset manager to launch the iShares Ethereum Trust. This latest move from BlackRock also follows the recent launch of Ethereum futures ETFs, which hit Wall Street about a month ago. Interest in those funds has been muted, and of course, BlackRock is also in the running to launch the first spot Bitcoin ETF here in the U.S. The SEC still has until January to decide on multiple proposals currently awaiting approval. Next, Celsius just scored approval for its plan to exit bankruptcy. The bankruptcy judge overseeing the case gave the nod to the restructuring plan, which would let Fahrenheit LLC reorganize the business with more focus on Bitcoin mining. The plan, which was approved by creditors back in September, could see as much of 85% of holdings returned to customers. Celsius filed for bankruptcy last summer in the midst of the crypto meltdown. Its former CEO, Alex Mashinsky, faces charges of securities fraud, wire fraud, and commodities fraud. That trial date is set for September of next year. Finally, crypto exchange Poloniex just suffered a multi-million-dollar hack. Right around 6 o'clock Eastern this morning, the exchange said on X that it had disabled its wallet for maintenance. Then Justin Sun, a backer of Poloniex, sent out his own post saying they were investigating a hack incident. Sun said the exchange maintains a healthy financial position and will fully reimburse affected funds. Blockchain data from PeckShield estimated the hack to be around $125 million across Ether, Bitcoin, and Tron tokens. All right, for our main story, it's been about 1 week since Sam Bankman-Fried was found guilty. Cboe Digital's Katherine Kirkpatrick argues that crypto regulation here in the U.S. is crucial following that verdict. So Crypto World's Talia Kaplan spoke with her about why she thinks that's the case.
You argue that crypto regulation is key, especially following Sam Bankman-Fried's guilty verdict. Why do you think regulation is so important, especially now? What did the SBF trial and all the information that came to the surface signal to people about crypto?
Well, I think the key is if you have centralized entities, there's no assurances of transparency unless they're regulated. And to be specific, I'm talking about centralized financial services entities. What we saw with FTX and through the events of 2022 were a lot of crypto centralized entities that were mimicking TradFi entities, but kind of pretending to be decentralized or pretending to be something different because it was crypto. But if crypto is mimicking traditional market structure, it should be regulated as traditional market structure. I, like many other lawyers in this space, we want legislation, we want rules, we want an infrastructure so we can build on that. And we're not going to achieve the kind of scale that really has the true promise for crypto until we have a clear, comprehensive set of guidelines and accordingly appropriate regulation, particularly for retail investors who need that degree of transparency and that degree of assurances that the entity is self-policing itself and held accountable.
So what do you think lawmakers here in the U.S. should prioritize in terms of crypto regulation, especially following that guilty verdict?
Well, I think the guilty verdict is great because I see it as cathartic. I see it as a point in time. Justice has been served. Let's all move on. Let's all move forward. Look, Sam Bankman-Fried committed large-scale fraud wrapped up in crypto. There are going to be wrongdoers in every industry, in every asset class. It's never going to change. We saw major carnage with banking years and years ago, and those banks were heavily regulated. I've engaged in a lot of debates and productive discussions as to what could have been done differently with FTX, but it's most important now we reflect on this and we move forward. I think everyone has learned a lot of lessons from FTX in that really important, deep diligence needs to be done, questions need to be asked, red flags can't be ignored. We are all hyper conscious of regulatory priorities. Cboe Digital really prides itself on being a kind of a trusted, safe market option for institutional investors. So, we really value our relationship with regulators. It's clear to me that there's going to be a continued trend in enforcement in things like financial intermediaries, decentralized finance, whereas other areas like crypto infrastructure may be less of a focus because we're talking about risk to investors. So I think it's important to focus on that. And it's important from the crypto side of things. And I see this as an absolute priority to engage on a policy level to make sure that the rules being put into place make sense for crypto. The definitions aren't overly broad or overly narrow. It's incredibly difficult to put crypto into a bucket when you have crypto assets and trading, NFTs, central bank digital currencies, blockchain technology as a whole. You can't really put that all under one umbrella and one succinct law. So you have to carve it the right way and think through it carefully and strategically. And I mean that from the legislative perspective, the regulatory perspective, and the market participant perspective.
So you note that unregulated centralized crypto must self-police and that the necessary trust for that type of engagement was eroded in 2022. Of course, the collapse of FTX 1 year ago certainly resulted in a lack of trust in the industry. So what do you think it will take for the crypto industry to regain some of that trust that was lost?
It's a great question. And one of the important distinctions to be made here is I'm talking centralized entities. I love the promise of decentralization where there's that degree of radical transparency. But where there's a centralized entity and where there's a flow of funds that the investors or strategic partners can't see where those funds are going, there's going to be questions, particularly given what happened with FTX. So an entity needs to be held accountable. It needs to hold itself accountable. And if it's regulated, it is accountable to its regulators. Behind the curtain, there are audits, there is scrutiny, there are questions being asked all the time, and you need to have the appropriate answers. So I think the industry needs to kind of view what it needs to take to get to the next level. All 2022 was a process of maturation. It was a process of growth for a nascent industry. But one of the things that keeps me here and a lot of the other people in crypto or interested in crypto is the depth and breadth of talent and, the technology, both the disruptive technology, but the technology that offers efficiencies and things like access to alpha for the average retail investors. That's all very exciting. We just need to keep sight of the basic risk, compliance, and legal parameters that need to be put in place to avoid any existential risk for the industry, like what we saw in 2022.
So what would you tell those people who argue that regulation stifles innovation and could therefore prevent crypto from reaching its full potential?
I think it's absolutely a balance, and it's a really difficult balance because I sincerely believe in the original tenets of crypto. For example, access to the underbanked is a great example. If you impose the kind of manual, know your client, anti-money laundering requirements that exist with banks today, you are defeating some of those original purist tenets. But there's a fine line. It's absolutely unacceptable for a centralized entity where there's a flow of funds to be ignoring the possibility of dirty money flowing through the protocol. So there's going to need to be made compromises throughout this process. I love to see the tech-oriented solutions that are being developed to grapple with these kind of issues because there are efficiencies to be had, not only to be applied to crypto, but to be applied to TradFi. And I'm not going to pretend that there isn't a massive burden to regulation and compliance. Cboe Digital definitely invests in that, and it takes an investment, both headcount, standing up the original infrastructure. It's very difficult for startup entities to do that. That being said, there needs to be a compromise. Both sides of the fence need to move towards each other and find something that's workable without stifling innovation and growth of this ecosystem in the United States.
Now, we have seen some regulatory developments here in the US since the collapse of FTX. Senator Elizabeth Warren's crypto money laundering bill has been gaining more support on Capitol Hill recently. And over the summer, US lawmakers advanced the Fit for the 21st Century Act to establish a crypto framework. But do you think those bills will actually get passed? And were those developments enough? Do you think more needs to be done to send a signal to Americans that what happened with FTX will not be tolerated here in the US?
I actually think it might be the opposite. I knew that there was going to be an extremely punitive reaction to the events of 2022. And to some degree, that's appropriate. Legislators and regulators need to appropriately penalize the wrongdoers that perpetrated the events of 2022, that enacted carnage on the broader crypto ecosystem. But that being said, all of the good actors in crypto that are spending all day, every day trying to do the right thing, investing in legal and compliance in an environment that it's not always easy to assess, the parameters, those entities shouldn't necessarily be penalized for the events of 2022. I would love to say, I predict that we'll see market structure legislation in the next 6 months. I am not optimistic about that. I think there's a much better chance of a stablecoin bill being passed, but even that's potentially in question. I think the sooner we get any sort of crypto legislation, whether it's comprehensive market structure legislation, the better, if it's the right piece of legislation.
Kirkpatrick also provided her outlook for crypto in 2024. You can catch her full interview over at cnbc.com/cryptoworld. That's all for this week. We'll be back again on Monday, and we'll see you then.